In today's video, we are going to review the results of the backtest that I did on the whole moving average. So another type of moving average compared to the simple moving average, the exponentially weighted moving average, the Kaufman adaptive moving average, and yesterday the volume weighted moving average that I've already backtested in the past videos. So please refer to these videos to see the results of the backtests of these moving averages. So today this is the whole moving average study. As you can see, this is the blue line compared to the simple moving average in yellow, so both of length 100. And as you can see, the blue line reacts way faster to the price movements, and this is, I believe, the main feature of the whole moving average, which tries to both react way faster to price changes and at the same time stay quite smooth to reduce the noise. As you can see, compared to the simple moving average in yellow, the blue line is way closer to the price, so it will trigger way more trades. So this is something that we can keep in mind. The strategy rules that I'm going to apply on the backtest today is still the same, always the same in the past videos. I just changed one time for the Kaufman adaptive moving average, where I used slope change based rules, but today the rule is the same. We enter along when the candlestick here in 4 hour closes above the blue line. For example, here we would have entered long and it would have been closed about let's say 1 day later or so, when the red candlestick closes below the blue line. So a very short and losing trade here, for example. So we are going to take a quick look at the heat maps for the daily time frame, the 4 hourly and the 2 hourly. Just a quick note also, I apply a 0.1% fee on the entry and exit of each trade, and also I compound 100% of our allocation to the strategy each time to the long trade we take. So this is a long only strategy. So if you don't remember, the goal of the channel is to backtest many technical indicator based strategies and to converge to a portfolio that trades a diversified range of the best strategies that I found based on these technical indicators. So I have some filtering in between to collect the best versions of each and every technical indicator based strategy, mainly on Bitcoin. So my ultimate goal is to trade a portfolio, and I want the equity curve to be as smooth as possible and to the upside, of course. So this is the data that I'm gathering on the premium member area. I gather all the best strategies that I found on the simple moving average, the exponentially weighted moving average, the Kaufman adaptive moving average, the volume weighted moving average, and today the whole moving average, and also in the future many more technical indicator based strategies. I find the best parameters for each and every one of these strategies, while of course trying to avoid overfitting, so that I have some indications at least that the strategies may work in the future price action. So because when we backtest a strategy, of course we select the best one that we find, and it may not work in the future if it's an overfit. And that's why we want to take some precaution and try to avoid that as much as possible, even though this is a difficult topic in algo trading, in automated trading. So let's look at the results. So very quickly here is a backtest of the HMA price crossover strategy that we use here. You can see on the top chart the number of trades represented by the green dots, which represent the entries and the exits of each trade, and the middle chart, which is the blue line here, which is the equity curve. From a capital of $1,000, it ends up being $20,000. So this is over a 7-year long period or about so, because it started in about 2017 or 2018, depending on the length of the whole moving average that we are using here. So this is quite good performance. I think better than hodling simply Bitcoin. Why? Because the drawdowns exist, of course, but they are lesser than the Bitcoin hodling version. And also the performance is quite similar, because with a Bitcoin at about $4,000 at the beginning of the test and ending at about $100,000 here at the end of the backtest, it would be a 25x. And with this strategy, we end up with about 18x to be precise. So a bit less, yes, but we have to account for the fact that there are less drawdowns, or the drawdowns are less difficult to endure, they are less deep. So let's look at the heat maps. So here's the daily time frame heat map for our whole moving average price crossover strategy, long only. So as you can see, the best length would be around 250 to about 330 or so. We have also a green area around 130, which is not so well defined, yes, but it would be something that we could trade. The only drawback here is that in the daily time frame, and it's typical of the daily time frame with my strategy here, the number of trades is not very high. So as you may know now on this channel, I'm looking for strategies with a certain number of trades, a certain number of occurrences in the backtests, so that we have some conviction, some statistical trust in our strategies to trade live. So when there's too few trades, I don't want them usually. I ditch the strategies versions with too few trades. So let's take a look at the 4-hourly. So here's the 4-hourly version of our whole moving average price crossover strategy again. So the same long only strategy. As you can see, the best sharp ratios are with a length of around 140. But yes, I don't like this area very much because it's very concentrated, and when we go outside this area, the sharp ratio, as you can see, drops significantly to 0.5, and also when we increase the length, the sharp ratio also drops from 1 to below 0.9 and so on. So I don't like this area very much, even though the sharp ratio looks good above 1. And the multiplier, so the return multiplier is good also, so about an 18x here. Yes, I don't like it very much because the performance seems to drop very sharply, both when we decrease and we increase the whole moving average length. Although, of course, in 4-hourly, we would have more trades than in daily, and that's one thing that I'm looking for. So let's look at the 2-hourly. So here's the 2-hourly version, but usually that's what happens with the 2-hourly. The sharp ratios are not very good. Very few of them are above 1. This is one test that I want my strategies to pass. They must have a sharp ratio above 1. So yeah, as you can see, the whole moving average price crossover strategy that we studied today is not very good. So yeah, we could stay with the results that we have in 4 hours. It's not so bad, even though I don't like very much this bluer area here because of the sharp boundaries. But I think we should stick with this version as this is the best one that I've found so far. I've also quickly explored another way to enter and exit the trade. So instead of waiting for our candlestick to close above the whole moving average in blue on the top chart, so as you can see here, it would close above, we wait this time for the slope to be an exceptional or an outlier slope in the positive values. But yeah, what I don't like with these rules here for the whole moving average, it was working well for the Kaufman adaptive moving average, but there are too few trades. But yeah, the performance looks good, as you can see in the middle chart. The equity curve is not so bad, and the sharp ratio is above 1. So I also tried in 4-hourly. This is better because there are many more trades and the performance looks good. But again, the number of trades is not so much because there are, I think, 25 trades or so, if I remember correctly. And I tried also in 2 hours. So still with the slope-based rules, there are more trades than in daily and in 4-hourly, but it's still not enough. So yes, I think we are going to stick with the whole moving average price crossover simple rules for our long only strategy here and ditch the slope based rules. I also wanted to compare quickly with the simple moving average price crossover long only strategy. So the rules using not the whole moving average but the simple moving average. I wanted to compare the results here. So as you can see, the best simple moving average period length would be around 130 for the daily time frame, and for the whole moving average it would be, yes, there are many lengths that seem good at first sight, so around maybe 140 and also 300 here. So by comparing the two like that, I think there is some kind of benefit of using both the simple moving average and the whole moving average as well. Why? Because the optimal period length for these two types of moving average seem to be quite different here in the daily time frame. So let's take a quick look at the 4-hourly version. Here in blue you can see that the best length for the simple moving average price crossover strategy would be around 240 or 50. And yes, again, for the whole moving average price crossover long only strategy, it would be around 140 or so. Even though, again, I don't like this area too much. But as you can see, this is the same benefit probably. The optimal length seems different in both cases. So for the simple moving price crossover strategy and the whole moving average price crossover strategy. So there is seemingly some kind of benefit to use both in our portfolio here. And to conclude, let's look at the 2-hourly versions. Here the simple moving average where the best length would be around 240. Also, let's notice that the Sharpe ratios are quite good for the simple moving average version. They are usually above 1 in this area. And for the whole moving average price crossover version in 2-hourly. So yes, again, the Sharpe ratios are not very good, but you can see that the heat map looks quite different again, and it was the same for the daily and the 4-hourly time frames. So yes, we might be benefiting from using both moving averages in our portfolio. So I'm going to continue testing the whole moving average version in the premium member area, and maybe in the future find better strategies rules. So if you found some good value in this video, please hit the like button and also subscribe to the channel to hear from me in the next backtest that I will do on the channel. I hope you see now that having a data-driven approach in algo trading can lead to better risk-adjusted returns, and not only returns. We are not just looking at the X, the final multiplier in this backtest, we also look at the risk. So this is essentially summarized in the Sharpe ratio value here, which we are looking for to be above 1. I see you in tomorrow's video where I will study another technical indicator. Bye bye.